mistakes that I typically see in small businesses is number one, not looking at cash, not looking at the bank balance, not looking at how much cash flow you're coming in or cash flow is going out. And it usually comes from this place, at least from what I've noticed, as being scared to see the money, avoiding and confronting that you might be losing money, or you're earning a lot of money in your business and you're like, I should be okay. So the biggest mistakes that I see is that if we're not regularly looking at our bank balance and our cash inflows and outflows, we're not making fully informed decisions. And what this could lead to is overspending. It could lead to poor budgeting if you're not doing any budgeting. But more importantly, when we do start to look at our numbers, and whether you have a bookkeeper or you do it on your own or work with an accountant, we have more peace of mind. So we can actually make calm, informed decisions on how to be navigating the growth of your business. The most important part of money management or cash flow management, again, like I said, is to be paying attention. To be paying attention to your bank balance, your spending, and your earnings. And especially if you are a small business owner and you do have other cash flow generators, and you want to start distinguishing how is this particular project or business operating, it's really, really important that we understand the fundamentals of money management. So if you think of your bank balance, I'm going to compare this to driving a car. Your bank balance could be represented as the fuel in your tank. So it's quite easy if you go into your car and you see that you have a full tank. It's like, okay, good. You can start driving your vehicle. You can start operating. If your balance or your fuel was at zero, now you have to fuel up. Now, how you fuel up is by earning money or by selling products or services. Think of these as cash inflows. Really important to know that your cash inflows are going to be increasing your ability to spend or provide more value to your customers. Depending on your product, you might also have to spend money before you earn money. So the cash outflows, think of as you actually getting into the car and driving and using up your resources. Now, when looking at this metaphor, it's pretty obvious if you're running low on fuel, you're going to need to fill up. Or start to be very mindful of how you're using your fuel. So the biggest challenge that I notice in small businesses and people that are not feeling very confident or aware of their finances is that we're actually not keeping track of what that fuel level is. And we're not keeping track of when money's coming in and when money is going out. So what's really important about these fundamentals are that if you're not looking at these numbers, if you're not tracking exactly how much money you're bringing in on a monthly basis and how much money you're putting out on a monthly basis, we're not really going to know how effective your business is operating. And if you're not entirely sure about how to be tracking this, it's a really good idea to start looking at the bank account. So quite simply, you could look at your bank statement and start to pinpoint, or your credit card statement, start to pinpoint, is this a cash inflow or outflow? Is this business related or personal related? And that way, at the end of each month, you could actually track. I earned $200. I spent $400. Okay, that means overall, I went down $200, right? And this is a practice that I recommend all business owners to get into as soon as you can, because the more clarity that you have on your fuel, the better decisions you can start making. I'd say the most important part of budget setting is that we set a budget, we go test the budget, and then we create another budget. So as a small business owner, it's really hard to predict your revenue or your cash inflows. It's a bit easier to predict your expenses, right? How much you're going to be spending. I like to think of monthly basis or quarterly, every 3 months. And when building a budget, it really depends on how much money you're willing to put into the business for the expenses. And if you're just starting out, I know it could be daunting to have to think about putting aside $1,000 for product development or for buying inventory, or even something as small as subscribing to a new subscription for online services for $15 a month. So something that's really important is that when managing your cash flows is that you're investing your money. I like to think of investing your money into resources or products or services that are going to help you generate revenue, especially at the beginning. There's a lot of free tools available out there, but to invest into costs or outflows that are really going to help you generate revenue is really, really important. And you can start looking at a budget as what's the minimum spend that I need to make per month just to keep this business running. That could be your base case budget. And as you start to expand, like, oh, well, if I want to build my business a little bit bigger, more optimistically, what else could I be spending my money on? And we start to look at different case scenarios. And likewise, when it comes to revenue budgeting, it's really important that we take a conservative base case and an optimistic approach as well. For me personally, when I was running my business, I was way more optimistic than I actually thought I could actually achieve. I thought I'd be able to have, 10 new clients in the first month. No, I ended up having 1. And if I continued thinking 10 new clients, that's my goal, that's my budget, and that means my expenses would be lining up with that revenue. That was very unrealistic. So that's why it's important to have an idea of where you're going with your business for the month. Test out, track what's working, track what's not working, and then recreate that budget. If we expect too much or too little out of ourselves and our businesses, we're going to have challenges in aligning our mindset, the results that we're actually getting with what we're expecting. It's really important to start to get real data. Look back at past months and build your budgets based off of what you've actually seen. So business and personal expenses, why keep them separate? Number one, when I was starting my business, is I wanted to know if my business was actually operating efficiently. And at the beginning, I didn't set up a business bank account. I kept all of my business spending and my earnings were all in my personal bank account. And I was also working a full-time job. So I wasn't able to just look at my bank account and say, oh, I made $5,000 from my business. Like, that wouldn't work because there's all these fluctuations in my bank account, any ins and outs from spending, from earnings. So it's really important, especially at the beginning, when you're starting your business and you don't have a designated bank account or a designated credit card for your business spending, you start to track this separately. And why this is so important is when we do not have clarity of what's personal and business related, it could get a little bit tricky when making financial decisions, especially when you're looking to serve customers or clients and you need to make an investment for your business. At the beginning, I kind of did see whatever I'm earning in my salaried job is going to go into my business, but I knew that wasn't going to be forever. So the most important part for me was actually looking at how much inflow I'm getting in a month, specifically from the business, and how much outflow or expenses I'm spending in the month, specifically from the business. And why this was actually really important is as I wanted to spend more on my business, I realized that there were some of my personal spending that wasn't very necessary. And when I started to think more entrepreneurially, it's like, would I rather go out for a $50 meal or spend $50 on something that's going to help my business grow? And when it's all blended together, we don't have that clarity. When we start to see it separately, we can start to make business spending decisions and personal spending decisions. And it's extremely important because as you scale your business, as you grow, the biggest implication is actually going to be around your taxes. So for one, there's a mindset of how to separate business and personal spending. And for two, it's, well, what's the impact on taxes? And that becomes a huge headache. If you're not keeping separation, the government's going to be asking you, how much money did you earn from your business? How much money did you spend on your business? What is your net income? And that's what you're going to be paying taxes on. Or what are your losses? That's what your tax credit's going to be. Without this separation, we're lacking clarity. And as a business owner, you want to have as much clarity as you can on your finances. And if it means spending some time at the end of the month, marking receipts, or highlighting your credit card statements, your bank statements, this is personal, this is business, it will definitely pay off. And the bottom of this, the easiest way to go about this is to have a business credit card, a personal credit card, and keep that separate. And when you are ready to open a bank account, you can have a separate bank account for personal and business needs. So to best prepare for your tax return, I'd say knowledge building is key. So if you're not working with an accountant or you don't have any friends that are accountants, start asking this exact same question. And as well, go online and start reading up on taxes for businesses. And depending on what state or province or country you're in, there's going to be different rules. So my first piece of advice is start educating yourself. And yes, it can get overwhelming. Take it piece by piece. Start reading and asking the questions of, okay, I don't understand this term. What does this mean? So there's the educational part of learning how to manage your business finances and taxes. And then there's very practical parts of it. Being able to track exactly how much money you're earning, how much money you're spending. And also, depending on the state or province that you're in, you may need to be tracking the state or provincial taxes or the federal taxes. And what's really, really, really important is maintaining documentation of your receipts. So whether that's a physical receipt from an in-store transaction that you made or a digital receipt from an online purchase that you made, you need to hold on to those receipts so that you can go back to that information and track backward looking. Now, to be very proactive, I'd actually hold on to these receipts, either take pictures of them, put them into folders, do it on a monthly basis. Put all of your receipts into one place where you can know that you go to at the end of the year. Compile that all together. And depending if you do your taxes on your own or you work with an accountant, it can be as simple as providing all of that paper support or digital support to your accountant, or bringing it in for yourself and entering it into the tax system that your state uses. I personally like to keep everything tracked in an Excel sheet or a notepad, just so I have an awareness of what the flow of my money is looking like. But if I were to summarize, start educating yourself, start asking questions when you are unsure. One of the biggest skills as an entrepreneur is asking questions to experts that know more than you, so that you can actually use them as a resource, educate yourself, and for them to potentially do the service for you. And secondly, it's just get in a really good habit of keeping track of all of your receipts. I know it could be a pain if you have a lot of transactions, but digital folders and literally like having Ziploc bags or envelopes to just put it there. Don't need to worry about it until tax season.